Yo, what's happening, people? Is everyone all good? Where we at? Where's the family? Can anyone hear me? Yo. Ah, there it is. Britannia, how you doing? Star Reach, CC, members, what's good? Awatas, what's going on, bro? Well done, Peter. K-Money, what's happening? Arte, what's going on? Alejandro, how you doing, man? Have I got an echo? Maybe because I'm not too close to the actual... Yeah, how is the US doing, man? How is everyone around the world? What's going on? You hear me double? Why do you hear me double? Wait there. How's that? Yeah, it's fine, yeah? Ah, you had me thinking there, man. I was like, shit, don't want to disturb Mike. It's Mike's son's birthday today, man. So we got to show some love to Mike's kid. So Mike's pretty caught up, unless he's going to pop in here and say what's good. Yeah, wicked. Nah, it's all good, Samu. How you doing, man? Yeah, stocks took a hit today. They certainly did take a hit. Sheepcoin, she took a hit. But that was always going to happen, because if you notice the 3 green candles on the chart, you know. Oh, man, this marketplace is funny. But tonight is a little bit of a somber evening. Okay. Granted, I'm not my normal self. All right. But we are consistent. And that's what I'm here to do for you today. You know, no matter what happens, you know, I'm here. Yeah, Vitalik, he donated $1 billion worth of Shiba to an Indian COVID fund, which I think is a good thing. All right. But he was given $8 billion, if I'm correct. So yeah, it's like, can I explain the New York reversal? I'm going to get into all of that. Yeah, pulling the rug. If he pulled the rug, this coin would have just completely dropped. It hasn't done that. You know, it's still in the profitable zone. But that's not really the concern. You know, we need to pay attention to what Ethereum's doing. You know? Yeah, true. People did feel offended with it. But what's wrong in being charitable? Alejandro, if you're going to move from crypto to Forex, okay, there are a lot of things that you need to take into consideration. Forex ain't a game to fuck with. Tell you that now. It's not a game to mess around with. You're not going to have this sort of, you know, when someone sells a certain amount of coin, people respond to it. It's all based on the economies of scale around the world. How's dollar doing? How's gold doing? Okay. I mean, let's look at this. Yesterday, we were talking about gold's projection on the stream. Well, she's fulfilled the first projection. Now she's on her way to fulfilling the next projection. You know, we understand something. Stop, hunt, rise, drop. Gold's coming back. Risk is back on. What's dollar yen doing? Funny that is. Risk is back on. You know? Very peculiar thing, isn't it, guys? When they like to move. Look how they surprise people. You know, you got here W formation, triple A, effectively an inverted head and shoulders. You got the left shoulder, the head, and the right shoulder. Bang. See you later. Yeah. When the risk is on, they put their money in dollar. When the risk is on, they get it out of gold. Okay. So that's the disparity that I look for. All right. And that's what I look for when I'm trading Forex. Those are the sort of things. See, a lot of people, I would say, yeah, I'll get to that in a sec. But let's consider what's going on across the board. Anybody panicking right now? That's what I want to know. Is anybody panicking with what's going on across the board? I hope you ain't. Because I will not be happy if you're all panicking and worrying about positions and what have you. You know? No, fuck. No, that's it. Good. Don't care about price. Good man. Don't care about price. Well done. Yeah. That's what it's about. Buying the dip. Well, you know, that's another story. I sold my house, my niece, and my dog. Sold my house and my niece. My niece. You sold the niece. Yeah, tell your mom and dad, don't worry about it. Oh, shit, man. That's funny. I needed to have a little laugh. All right, then, guys. I'm going to make this stream. There's two themes to the stream itself, okay? I'm going to go through the price action, and I'm going to tell you everything that you guys need to know. All right? We've had a very interesting day, all right? So I'm going to get straight to that, and then I'm going to talk about what's kind of happened in the Greek community in the UK, all right? I'll get to that in a sec, but let me focus on what's going on here right now so you guys get everything you need. So both on all, should I say, all three, Bitcoin, XRP, and Ethereum took a little bit of a tumble today. I tell you what, for Ethereum's point of view, about bloody time, man. You know, a nice little retrace back to the 50. Now, this is what I want to see. I want to see Ethereum make a move away from the moving average and retrace back down to it. That's what I want to see. When I see that behavior, it tells me that they're playing the game. Okay? Now, earlier on today, the range daily high was actually here. Okay? It was smack bang right there, the range daily high. And we discussed to the patrons that, and in the projections channel, okay, that the range daily high is effectively a very, very important area because it's the maximum point that price can realistically achieve before it needs to pull back. All right. And granted, the range daily low is a zone that when price hits it, will always look to pull back from it because it's the maximum extreme of the high and the low for the day. Okay. At some point, you know, the market makers are going to step in and say, all right, we need to reverse this. All right. And you notice that it went for the high during the Asian session. So during the last final third of the Asian session, they triggered the shorts, moved it higher, stop hunt rise, drop. And they used this stop hunt rise because it was deviated away from the moving average. Now, I do recommend that you watch last night's stream to help you understand what was going on here. Bitcoin's projection from last night played out perfectly. Okay. And so did Ethereum's and so did XRP's. So there were trading opportunities for you to capitalize on. Okay. Now, what's important is this. All right. Ethereum has come back down, okay, and tested the psychological low, the psychological high for the week. Okay. So there's Ethereum's psychological high. All right. Let me just change that so it doesn't look so awkward. Oh no, that's not right. Oh, that's why. Let me change that there. Change that to green. Happy days. Okay. So here you go. Ethereum's psychological high and psychological low right there. Okay. Now she came back and tested it and bounced straight back. Now do you understand what I'm talking about with the true support and resistance of the psychological high and low? All right. Please use those. Make sure you use them because that's the only real true support and resistance. These medium support and resistance points, they ain't going to do anything for you guys. You want to be at the areas where the market maker is going to step in. Okay. Now, Ethereum comes back down, spikes the low. And I said earlier on today that the patrons will know that price will recover this candle. And she did just that. Was there a scalping opportunity there? Most definitely. Look. Pins the low. You even go down to the 5-minute time frame. All right. Look what you got. Price pulls back all the way, stopping volume coming into play. They want to regulate the price. Massive volume stepping in. Trade it all the way back to the 50 EMA. Happy days. You're done. Okay. Now, these are previous zones that the candles should effectively recover. All right. So we'll be waiting for Ethereum to come back to the 43.12 point. That's a point of interest. Remember, this is a short-term day trading strategy. Okay, I don't care what price it is. All I care about is where the liquidity pools are being established. And you can see where they are on the left. Naturally, price should recover and come back above the daily open, okay, from the previous session and then work higher. If it takes out the daily open, happy days. It'll come up, retrace, continuation to the upside, okay? Now, on the bigger pattern of Ethereum, you can see that we have effectively started what would appear to be the pattern. Okay, now having to extend that because it didn't play out in that instance. That's no problem. Okay, but you can see how she effectively went towards the high over here, came again, spiked the range daily high and pulled straight back. Okay, now I'm waiting for Ethereum to rise up. All right, I'm not worried about Ethereum dropping. No way. Okay, we will only know if she's going to drop if she doesn't recover the 50 EMA, and we have to be cautious. We have to make sure that if she does drop, then we need to prepare ourselves for another move to the downside and aiming for the 200 EMA, which is down here. We haven't hit the 200 EMA for a while. Okay. Now, that's Ethereum right there. Bitcoin, very interesting behavior by Bitcoin. Look at that, man. So, today, we assumed that this pattern would come into play. It didn't play out. No problem. Because we wouldn't be in a trade, all right? Because we would have been waiting for this pattern to play out. Once again, the power of confirmation, saving you money, not wasting it, not putting you up to experience, you know, fear, anxiety, indecision, trying to work out what the direction is. Okay. Now I'm going to talk about something that's going to help you guys understand how these market makers play the game. As much as we are looking for patterns such as W's and M's, we need to be looking at the candlesticks now. Okay. Because they can switch things up. Earlier on today, I spoke about this candlestick right here, this green one. Okay. Now, this green candlestick is very important. Notice how the moving averages are flat. There's nothing happening. Okay. We came into the New York session. All right. We see this notable volume. If this was the candle that was going to reverse to send price up, what would we need to wait for? We'd need to wait for a confirmation candle. We keep banging on about it. That confirmation didn't happen. But what was happening here? All right. Now, market makers had effectively spiked the 50, triggered the longs to make them believe that price was going to continue higher. Then they came back down and closed below it. That is a stopping volume candle. All right. They didn't allow volume to go higher. They just managed to absorb as much liquidity of shorts to the downside so that they, liquidated the shorts to the high side, got them closed on the way down, and at the same time, okay, engaged the New York reversal. So this box, red box, finished up here and it reversed and went all the way down. Now, when was the last time we saw this stop, hunt, rise, drop? Well, let's look. Stop, hunt, rise, drop. Remember on Sunday night stream? Stop, hunt, rise, drop. These are the clues to the true market maker behavior. Look at that. It's not history repeating itself. It's a pattern that appears all the time. This is how they move price. This is how they trap traders. This is how they grab the liquidity. Stop, hunt, rise. It always seems to happen in New York. The main candles appear in New York. Okay. Now, what's Bitcoin doing now? Well, look, frankly, Bitcoin is now on the second leg of the W formation. You guys would not have been surprised about this. We were speaking about it last night. We said there were two scenarios. If this W formation was going to play out correctly, we would need to see Bitcoin continue higher and effectively take out higher ground and aim for the psychological high. She didn't do that. Also, we had this possibility of the second leg formation, second leg of the W formation to play out. Look at how it's landed. It spiked the low. Vector candle 1, 2, and vector candle 1 and 2. All right, spikes the low, and now she's looking at recovering back the zone. Now, if and only if the Asian session is relevant and they do decide to send price higher, price will need to come back above the 50 EMA. All right, so right now there is no entry. There's nothing for us. We need to wait for the pattern. If Bitcoin happens to break and go down lower, she wouldn't be going to an area that we wouldn't be surprised about. Why? Because look, we spoke about it last night. Possibility of coming back to this zone right here. There could be a chance that they come back to this zone. But remember, she's only come back to a previous point that she was at before and she didn't break any lower. Okay, there was the previous session's low 2 days ago. She didn't take out that low. She hasn't taken out this low nor this low. All right, we've effectively had 1, 2, 3, 4 hits to the low. Okay, is this their fast move, false move to the downside to reverse back up? We will only know when we see the confirmation of price reverting back against to the 50 EMA and then continuing from that point on. Okay, so important that you pay attention to it. All right, you wouldn't need to be worried about any positions because they're working the zones. Now, granted, we need to be aware that if price does come back to the 50 EMA, okay, she could continue to the downside. What cycle would we be in then? Well, you can see there's a clear M formation up here. So you'd be right, drop level 1, rise, drop level 2, rise, drop level 3. She could actually form a W formation down here. Look at the range daily low. Average daily range right there and the range daily low. So it's a possibility that if they do break down in price, they could send Bitcoin down here and form a massive formation. Because if you think that's a big formation, wait till they start going to real price discovery zones where they've been before, but where they're going to accumulate a ton of contracts, ton of orders of longs in anticipation to close them at the high side. All right. Yeah, you know, Evo, I mean, look, this is what I mean, guys. The concept of uncertainty is very real in this game. As much as we were, you know, we're looking for projections to play out, okay? Last night's projection played out perfectly. Look, you know, we started off here, okay? That's where we were. Now, is there nothing wrong in you trading that all that move to the upside? Happy days, man. That's money right there, okay? Now Bitcoin is coming back. Now, the patrons were I spoke to the patrons with, you know, quick updates, continuous updates, pretty much every other hour as this was playing out. Patrons knew exactly what was being developed right here. But more importantly, you guys, everyone, all of you guys were aware of what was going on because we were expecting this. Okay, it was one of the two options. If this move to the upside failed, then this move should happen. But what was it that we needed to pay attention to? Okay. We didn't see much liquidity. Ideally, if this was going to be a move to the upside, I wanted to see a notable volume coming in as it's coming out of the W formation. Now, remember, the smaller the W, okay, the sooner it's going to finish. All right? Smaller the W, sooner it's going to finish. Yeah, I called long last night. I did, Sangoku, listen, I did call long last night. Called long from here last night. Short-term day trading strategy, bro. If I say long, I don't mean that Bitcoin's going to go to 75k tonight. Do you know what I mean? It's a short-term day trading strategy. So there's nothing wrong in you accumulating. How many pips? 16,745 pips, which is half the ADR. So half the journey that Bitcoin would travel. Is that not a profitable position? Yeah? I'm going to always tell you, I ain't going to tell you when to enter and when to exit, guys. You made money on that. Not much, but every little helps. Hey, man. 400. You know what? Coming from Forex, guys, I'm looking for 10, 20 pips a day. Yeah, you can get 400, you can get 16,000 pips. Are you serious, bro? Obviously, it's all going to be down to the size that you put down. That's going to be relevant, but, you know, I'm playing with words. Listen, Sangoku, you've come here for entries and exits. I ain't going to give them to you, bro, and I'll tell you straight, it's not going to happen. I can't give you the right thing. I can't tell you when to enter and when to exit, okay? Because then I'm giving you financial advice. That's not the game that I'm in. I want the channel to stay open. I ain't going to break no community standards, guidelines, all right? We've been here. We've done that. This is about teaching you how to do it for yourself. That's what I'm trying to get you guys to do. You've obviously come to a second stream. You haven't been to any other streams, all right? So please. I'm trying to teach you guys about how to do it for yourself. All right, you want to know how to trade? You want to see my trades? Go into the channel. There's a playlist on there called Live Trade Crypto. Go and watch that playlist. You can see my trade entries and my exits. Okay, go and enjoy yourself there. But I ain't gonna say buy now and sell now. Nah, because then if it goes wrong, what happens? All right, not everyone's got the same risk tolerance. Not everyone's happy to hold a trade for long. Not everyone's got the capital to hold or sit through exposure. Do you know what I'm saying? All right. Cool. Yeah, I'm going to release another video for you guys. I'm going to do that tomorrow. You know. Regular candles. Godflesh, use regular candles. Tony, what's good, man? Story based on past events. Tell us about projections. It's better than we can backtest. Are you serious, bro? I'm good telling a story based on past events. Bro, you're not getting it, are you, my friend? You're not getting it. Okay? I'm here to teach people. Okay? Go back in the... There's even a channel based on projections, bro. A whole channel dedicated for projections. All right? Go into that channel. It's descriptions in the video, okay? The links are in the video. Go and watch all the videos there and watch how the projections play out, all right? I teach you how to trade. That's what I do. I teach how to trade, all right? Look, I don't need to go into it anymore, man. You want to keep asking this 1 against 812 people, more like 22,000. Fuck it. If this isn't for you, bro, fuck it, man. It ain't your day. It's not my day today, man, but fuck it, man. You can say whatever you want. Call me BS, whatever, man. I don't need to verify anything. Fuck that. Fuck that. Yeah, man, fuck it, man. Nah, man. Nah, but he came in last night. He was asking questions. I was facilitating them. Now he wants to know based on... if he understands the candlesticks, of course I'm going to talk about the past because look, the candlesticks get repeated. They retrace back. All right? Fuck that. Fuck that. Today's not a good day, guys, man. You know, I'm a snap. I'll lose my shit. You know? I will lose my shit. Okay, cool. Bitcoin. She's come back down. So what's happened today with Bitcoin, okay, is she's done pretty much what we expected her to do. All right, there were 2 scenarios that we waited for, and one of them played out. Could you have traded them? Of course you could. That's down to you guys. That's down to you with the information that you've got. You would know, okay, that the New York reversal, price comes in, spikes the high, railroad tracks, drop. Could you have taken that? Most definitely. Look at the daily open right there. You could have traded the rejection of the daily open. Okay? Yeah. Smurfy video, mad respect. Guys, it's just a bit of a shitty day today. I'm going to just be straight with you. I'm probably using some Goku as my fucking punch bag. Forgive me, bro. Forgive me. He's obviously come to 1 stream, 2 streams, and he's just saying the same shit that everyone else does when they don't know. And then a couple of streams later, they're going to come and ask the question, how do you determine the psychological high and low? That means he's studied it and understood what's going on here. There's enough for you to back that up. So forgive me, guys, if I do snap. It's not Call of Duty snap, but today's a shitty day. So I'm here. Alright? It's, yeah, sack trades. MetaMask got me pissed as well. I ain't even going to start about that. 1,000 small profit trades. Done. TN lights. Finished. That's what I want to hear. 1,000 small profit trades. Do another 1,000, bro, and then come check me. You know? You got it there. Joe Biru, good question. How does the market maker make money recovering candles weeks later? Retailers would have been liquidated by then. No. I'll tell you why, bro. Okay? Because not every retail trader gets liquidated. And don't make the assumption that every retail trader that gets wrecked is a standard guy trading on Binance, Bybit, or whatever exchange. Retail trader comes in the certain categories, and I will begin with. Okay? Don't worry about it, San Goku, man. I'm tripping with you, bro. Fucking hell. You chill out, man. Retail trader works like this. Banks. Okay? Institutional funds. Hedge managers, asset managers, governments, bonds, insurance. All these players come to the market maker. There's smart money and then there's dumb money. Okay? Smart money is market maker. Dumb money is the retail sector, retail trader. It's not just your average Joe. So when they send, remember, these retail traders, these institutional funds, they come with the millions and they need to dump their positions into the marketplace. So the market maker fulfills that. Okay? He fulfills that. Right? So when price recovers, look, price recovers this red candle here. Okay? Look at how it's just taking it back. All right? And everybody knows that the red candles always end up getting recovered. Why? Because market makers use the liquidity for the guys who went short, okay, to take out those orders, trigger their orders to go short. At the same time, they're building their longs. So when price is dropping, the sellers aren't in control. It's the buyers. Because as long as price keeps dropping, the market maker is buying at a lower price. For every time someone is selling and going short, the market maker is buying. When price comes back to a zone and retraces back up, not everyone's going to get liquidated because everyone has a stop loss up here. Now, these candlesticks effectively get triggered and become complete when the stops get hit because they've taken the liquidity of the guys who went short and now they're using them to get their longs filled at higher prices, which is why you see 90% of the time the candles always recover. All right? And that's why when you're making the assumption about when you're trying to establish what a retail trader is, don't think it's the average Joe. All right? It's everyone that comes and places a trade, whether you're a bank, government, hedge fund, asset manager, whatever. Funds, institutional managers, they come to a marketplace and they want to dump their money in there. Market maker grabs that order and matches it with anyone else on the opposite side. At the same time, he's taking a markup on there. He's also charging a spread and he's also using his own money, okay, to piggyback on top of that. In other words, there will always be liquidity. That's the story, right? That's exactly what the story is. Are whales considered retail traders? Yes. Just because institutional funds, what, you don't think they're whales? Whales are institutional funds, retail trader. Okay? They are retail traders. They come to the marketplace. They don't make markets. They come with a lot of money pulled from people, investors, and they come and they say, right, let's dump $500 million into dollar yen. So they come to the marketplace and they want that order filled. So how do they get it filled? 1,000 lots at a time. Bang, drop, 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 drop. At the same time, as I just said, market maker gets those orders filled. He then uses his money on top of that, sets a spread, has a markup on it. Bang, he makes his profit before the trade is even closed. Okay? That's not to mention the money that he earns on when the trade moves in his direction. What do you think? The market maker is effectively, there are three types of market makers: the guys in Asia, Europe, and the US. Now, these guys, yes, they are human beings, but they operate algorithms. They are high frequency traders. They are the reason why the marketplace exists. They facilitate, they create the game, right? When you come into this platform like MT4, I'm using an electronic central network. So my price feed is what the banks see, but there's a time delay from my end. All right. I will never see the true time of price because the banks will see it. Market makers will see it first. All right. Whereas me as a retail trader, I'll see it like 5-6 seconds afterwards. Okay. There's always a delay. Now, if I want to pay for that information, all right, I'm going to be paying a lot of money for that every month, like something stupid, like between 10 and 20, 30, $40,000 a month just to improve my fill rate at like, what, 5-6 seconds? Who knows? Okay. What you got to understand is the market makers' business is to move money from one time zone to the next, from one bank for one bank to the next. All right. For example, Hong Kong session. This is how it works. Hong Kong pretty much sets the range for the next trading day. Notice how they spike the high, raise price, and then they drop for the remaining session. So this is what Hong Kong does. It sets the zone, okay? And in the gap time from when Hong Kong closes towards when Europe opens, they have a conversation with the market makers in Europe, and they effectively say to them, we've trapped $800 million up here, $1.2 billion of sales to the downside, okay, of longs to the downside. So what I'm saying is they trap liquidity in either direction. Wherever there is more liquidity, the market maker in the next session is going to work his magic towards it, okay? So they move price up, get on the phone to the guys in Europe, tell them where the liquidity is at before the market opens. Everybody gets ready. The UK steps in. Liquidity starts working towards the area of the liquidity where the Asian market makers had set. Remember, they set their shorts at higher prices, inducing retail traders to go long. There are stops in this area. That means there's dead money down here. They send price into that direction. They fill their shorts at lower price. Sorry, they get their shorts closed at lower prices. At the same time, they start building their longs as price starts to drop lower. Okay? And that's effectively how it works, guys. The New York session comes into play. They recover, come back to induce traders to believe that, yeah, the bottom for the session is down. It's finished. We've got support here. They send price above the 50 EMA, trigger the orders. Then they retrace it back. The next candle spikes the high, gives the retail trader the belief that price is going to continue above the 50 EMA, but people don't wait for confirmation. And before you know it, price drops and collapses to the downside. And we are where we are right now, waiting for the W formation to play out. Okay, so that is pretty much the story. Okay, that would be a wise thing. Wherever you see on a website where they're saying there's more longs than there are shorts, you know it's the opposite. Yeah. I'll be straight with you. Do I plan on trading till I'm 65? I will always trade. Always. Because there will always be another opportunity to understand these players that we call market makers. Have I mastered the market maker? No. Will I ever be 100% on my trades? Maybe for a session. You know, I can have 2-3 days where I win every single trade. But because of the sheer volume of trades that I place, you know, I'm always going to have losses. If I place like, you know, depending on my strategy, on what I'm trying to do, excuse me, I could place 100 trades in a day. 25 of them could be losses. Finish up, 75 wins, completely wipes out the losses of the 25 losses. 25. That's how it works. You know, how can you tell a second leg of a W, slow trend or fast moves? The second leg of a W always will show you notable volume, vector candle formation, and it will stay above the previous low of the first leg. Why do they need formations then? Why the M's and W's? Great question, Philip. Here we go. Right, how many people are new to the stream? Because I'm seeing the good questions, man. How many people are completely new to the stream? Johnny boy, do you wait for a 1 hour candle close above the 50 to confirm the pattern? Wait for the candle afterwards. Johnny boy, wait for the candle that happens. If the candle closes above the 50 EMA on the hourly, wait for the next candle to close. That will be your confirmation. Try it. All right. Look at it here. Yeah. This candle here. All right. Spiked the 50, didn't close above it, closed below it. You would effectively wait for this candle to determine if this candle had strength. And look what happened. It closed below it. So you would have protected yourself. Ten Lines Media. £4 into 40. That's a fantastic return, bro. Forget the money. That's a fantastic return. Okay, then. So it seems like... Okay, then. Lewis, man. Thank you, bro. All right, then. So a lot of you are new. So welcome. All right. And let me explain something to you. All right. Why do they use M's and why do they use W's? I'll tell you why. Because they're psychological patterns. Okay. They are psychological patterns. Any of you guys that are new, you're going to come across a lot of things that are going to challenge conventional wisdom. And it's conventional wisdom that has been put out there about trading, which is why statistically 95% of traders lose. Okay? Straight up. That's why they lose. Because you're all doing the same thing wrong. You're reading the markets the wrong way. I guess all the new people in here, correct me if I'm wrong, but most of them would probably believe, based on conventional wisdom, that when price rises, it means buyers are in control. It's the biggest bullshit. Likewise, when prices drop in, sellers are in control? No. Because you need to understand one fundamental thing. All right? In order for you to buy, what needs to happen? Someone needs to sell to you. Okay? You can't walk into a shop that's empty and demand to buy everything if there's nothing to buy, which means there's nothing for you to, nothing can be sold to you. Why is that important to understand? Because as a buyer, when you come into this marketplace, where are you going to get the liquidity from when you want to realize a profit? You're going to get it from the contract that is against you. Likewise, when you are in a losing position, they're going to take your money, because what do you do with your losing position if it's a buy? You sell it. You turn it into the position that is against you. So the person that's sold against your position, he gets his money, and whatever difference that you put against his contract, he gets on top. Happy days. Now, this is happening over amongst thousands and thousands of transactions, and the person that we need to thank to who created this is the market maker. He makes that happen, right? Welcome to the zero-sum game. All right? Likewise, the concept of bringing it back to buyers in control, sellers in control, okay? We're of the impression that supply and demand as a theory can be applied to these sort of marketplaces. They can't, all right? The only place that supply and demand exists is in the infamous jumper story, okay? Now, this jumper story, if you're new to the stream, I use it to help you understand why economical theories can't really be applied in a psychological environment. Why? Well, let's look at it like this. Mr. Guy who has a shop and he sells clothes. He sells 3 particular jumpers. 1 red one, 1 green one, and a blue one. Okay? He has 5 of these jumpers each. Okay? He opens his shop and he welcomes his customers in. At the end of the trading day, he does a stock check. He sees he's got 5 red jumpers, 3 green jumpers, and 5 blue jumpers. What did he sell more of? Green jumpers. So naturally, the law of supply and demand will tell him that he needs to supply more green jumpers because there is more of a demand for them. granted, when you come into this marketplace, when price is rising to the high and you see this big green candle, why does it reverse? It's not because supply and demand is here. There's a supply and there's no demand. That's bullshit. It's because the market maker has absorbed enough liquidity to the upside to build his shorts at the highest possible price, and then he triggers his shorts by using the liquidity from the guys who went long. You're saying to me, okay, that the moon boy likes to take a break when price is rising? No way. If it was up to the guys who are optimistic about price, who have the moon boy mentality, price will continue higher and higher and higher, but that would fuck the market. Like, look what happened to GameStop. It just kept on rising, 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 rising. Where was supply and demand in that? It just kept on going. Yeah? Hope you're understanding that, guys. As you knew, guys, that's exactly how this game works, okay? You want to try and challenge it, please do, okay? Try and challenge it, all right? Because the game is psychological. Back to the concept of understanding why it's W's and M's. Here we go. So, when market makers step in, okay, the formation of a W, okay, is created when the first leg shows vector candles to the downside, okay? It then retraces back to the 50, and then it comes back down one last time with the anticipation for price to go up from that point, okay? This is what we're waiting for, okay? Now, why is it a psychological pattern? Well, let me explain it to you, okay? Market makers start working their positions to the downside. It means that they see interest to send price lower so they can get their longs filled at lower prices. Market makers don't buy at the highs. Retail traders do. They buy at the lows, okay? Remember, they've got enough liquidity. They can sit in negative positions for as long as they want. They can be more irrational, okay, than you can, all right? Your balance in your trading account is not going to match up to the irrational behavior of the market maker, okay? Don't try and play that game, all right? Now, when price is dropping, market makers are stepping in and getting their longs filled at lower prices. So they build them by opening orders like this. They drop their orders slowly. They induce the retail trader to believe that the market is dropping. Remember, the market maker can only get his buy order fulfilled if he creates the illusion that price is dropping. So the players that come into the marketplace are the ones that go short. This is where he started the short game. Spikes the high, retraces, price closes below the 50 EMA. There are retail traders out there that trade purely off the 50 EMA, okay? If it closes below it, let's go short. So bang, look at them. They drop. All the retail traders are going short. Everyone's excited. This is a news candle triggered by news. It installed in the retail traders' mind that Bitcoin was dropping. Everybody went short. In order for them to go short, a market maker needed to be on the other side with a buy order, because he's buying your short. He's buying your sell order, okay? He buys, he sends price all the way to the downside, and at the point that he believes he's got enough liquidity, enough people going short, he then reverses with an aggressive move back up to take out the stops from the guys who went short, okay? He now opens up the liquidity and sees a return for his longs. Whilst he's working price back up, okay, he's taking out all the shorts who put their stop losses in place. All the liquidation points are being hit, all right? Because with those liquidation points being hit, they are providing the liquidity for the market maker. Now, because people are always trying to get involved in trading, and the fear of missing out is triggered continuously in this game, all right? Market makers make another attempt to the downside. They induce another retail trader to step in, okay? They repeat the same process. All the while, they work their way all the way up to the 50 EMA, okay? When they work their way back to the 50 EMA, this is the center point of the W formation. They make the retail trader believe that the short game is not happening anymore. So we need to get in and go long. What do they use to induce the retail trader to go long? They use the 50 EMA. They make the retail trader believe that because price is closed above the 50 EMA, let's go long. He goes long, he goes long, he goes long, and then he spikes the high, gets them committed to go long, and then the market maker reverses price again and takes out all the stops and all the liquidation points for the traders that got involved in here. Now, granted, last night we took this trade, okay? But why did we take this trade if I'm telling you it's designed to screw you over? Because we understand what's going on, which is why I always say to you guys, pay yourself. Okay? Always pay yourself. Okay? Now, where's the psychology? Market makers now come back down to the 50 EMA. Retail trader right now is completely flabbergasted because he's like, right, I tried to go short, didn't work. Price has now looked to close above the 50 EMA and I've gone long. And now my long has now been liquidated. Right, what am I going to do? I need to catch this move. Oh no, look. Price is dropping. All right, this downtrend is resuming. Cool, I'm going to enter. So the market maker induces the retail trader to step in. He breaks lower. Stop hunt rise. Okay, throws those guys off. Makes them see that the 50 EMA is either resistance or is a new area to continue higher from. Traps those guys to go long, and then he opens up his shorts. Sorry, opens up the longs at lower prices. Sends price down lower. With this red candle, he triggers the guys who went short over here, gives them another opportunity and the belief that price is going to continue lower, and before you know it, price drops and returns back up. Okay? And that is how the second leg formation is created. Where are we now? Well, all that is left to do right now is to effectively determine whether or not this move continues back to the upside. Alternatively, Bitcoin could actually collapse and aim to hit the range daily low, which is an area that we will not be surprised with. Why? Because it's the previous zone that they had previously built their their shorts at higher prices. Okay? This candle is very important between the 48 and the 50 mark. Very important zone right now. If Bitcoin breaks lower, it will see that zone. Okay? I hope that helps you guys. All right? And if you guys look, I haven't, looked at the comments or anything like that. If you're not getting it, please go back and watch the previous streams, guys. It's all in there. Okay? I've been fortunate enough to teach people in this stream and created 4 millionaire traders, man, from scratch. One guy started off with 8k, turned it to 1.2. Got another guy started with 100k, turned it into 1.4, 1.34. The other guys took very good trades and they built their positions and it escalated from there. All right. The Discord has collectively earned over $1.5 million in 4 months. And that's just sitting, watching me talk you through the patterns that play out. All right. This is all because of you guys, man. Nothing to do with me. I just shown you a pattern. That is it. And I'm giving you insight into how this game works. All right. How likely would it be to retest the low? Right. Let me explain to you. Right. The concept of when you're trying to understand what's going to happen next, that's your baby brain kicking in. That's the safety brain. Our brains are wired to seek the safest option. We're not designed to address uncertainty with welcome arms. Okay? We need guarantees. Yeah? Will Bitcoin go to 49? What you're really saying is, I want to enter short right now. If I do, will I see profit because I want it to go to 49,000? That's what you're saying to me. You're not caring if it goes to 49. You're hiding behind what you would like to do during the journey it travels to 49. And that's make money. And that's okay. There's nothing wrong with that. Okay? And that's true. DeFi, if you're a holder, you want Bitcoin to go down, that means you're going to buy more if it's cheaper. But if you're a trader, you don't give a shit. Okay? A trader makes money when price rises. A trader makes money when price drops. All right? It doesn't matter. For me, I don't care what price Bitcoin is at. I don't care what Ethereum's at. I care what she's doing at the 50. I care what she's doing away from the 50. And that is it. Done. I have seen sheep today. Who cares? Shit coin. You know, we made money on the move, okay? If you didn't pay yourself, well, that's a different story, okay? But we made money on the move. That night, it went on to make 150% gain. Happy days, man. You know, what more do you need? You know, good traders cut their losses. Great traders change direction. All right? Play with that. How low will Ethereum go? Great. Let's have a look at Ethereum. Okay? How low will she go? Well, look, she hasn't gone anywhere that we haven't seen her go before. You know? So you mean the trader would rather F the boom market? No, a trader will trade if it goes up and if it goes down. For example, a holder is not going to buy when price is rising. He buys when price is dropping. So he has a limitation. A trader will buy when price is rising. He will buy when it's dropping. He will buy when it's selling. He will buy when it, you know, he will sell when it's dropping. Do you understand? A trader has so many options. A holder doesn't. But a holder has obviously, he set himself up for that because he doesn't care. Holders don't care, only if it's cheaper for them. All right? That's all they care about. There are some guys that I know, okay, that will look at charts once a quarter. All right? Once every 3-4 months. They look at the price, they look at their portfolio. Every 3 months. Oh, I can get some now, it's cheaper. Buys the amount he needs to buy and then forgets about it. You know? What's good, Robert? How far back in the video should I go to learn what you are teaching? Josh, if you want to become an independent trader, you start from day one. This is the catch, guys. Okay? The catch is, if you want to do it, start from the beginning. All right? There's no shortcuts in this game. Everyone that has watched the streams in this channel, I'm guaranteeing one thing. I am guaranteeing that I will help improve your trading. Improve your trading to what it is right now. There are people that have been losing consistently and now they are winning consistently. I'm telling you how I trade the markets based on what I understand about it and the life experiences that I've managed to come to with this game. Trading 11 years. And you know what's fucked up? I only started trading crypto 4 months ago. I've been trading Forex. Everything that I'm telling you is all about Forex price action activity. Okay? And we've been doing it for 4 months and it works. It's solid. Why? Because market makers are everywhere. If there is a place to buy and sell, there's a market maker. Why? Because there's liquidity. And what better place to start? Cryptocurrency. Weekly high, weekly low. I'm confused. How it helps with trades. I've been listening, but I'm still confused with... Can you please explain it on the chart? The weekly high and the weekly low. Weekly high and weekly low. You watched the videos twice, Joe. That is rough. Fair play to you, man. When you say the weekly high and the weekly low, in what sense? Are you talking about the psychological high and the psychological low? Is that what you mean? Sonny Biggs, my guy. My guy. What's happening, bro? Formed and get a good entry. Good question, Deadeye. Deadeye's asked, Yo, Tino, I understand the New York reversal now and the formations, but I can only see the pattern when it's over. How do I recognize the pattern before it's formed and get a good entry? Okay, so this is where I, as a discretionary trader, you know, I don't always wait for the pattern to play out. That's me, because in my opinion, I believe I'm proficient enough in the strategy to take those shots. Okay, but here's an example. All right. See, if I see this red candle here, the criteria for a W formation is this. You need to see at least 2 to 3 vector candles. That is colored candles, strong pushes to the downside. When price stops, price will always revert back to the 50 EMA. Go back, get a chart up, and go back on Bitcoin. Start from January 21st, 2021, and work your way forward, because that's when this stream started. And I started off with Ethereum, okay? And try and draw out the W's, but make sure you have this software, all right? If you need this software, okay, download it. It's in the links to the description. Once you've downloaded this software, it's MT4, make your way to the Discord. The link is in the description also, all right? And in the Discord, there are the indicators, all right? Once you've done that, then go back in time and try and draw the W's and the M's. The way you determine the W, vector candles to the downside, you're looking for 2 to 3. Wait for price to revert back to the 50 EMA. Then it makes another move to the downside. You want to see more vector candles, and then you want to see price stabilize and work its way back up. The true validation of a W formation is if you see shift candles stepping out of the zone. And the reason why you want shift candles is aggressive green candles pushing away from the zone, coming out of the W formation, because they've absorbed the liquidity in this zone and now they need to realize a return, the market maker. Because if he doesn't get out of this zone, he then has to facilitate the orders for the retail trader who went short in this area, and that means the market maker is going to be at a loss, and he's not in this game to lose money. Okay? So important. It's so important you understand that. Now, how do you verify where, if you're going to catch a W formation? Well, the first thing that you want to look for is you need price to close above the 50 EMA. That's the first indication. Even if price closes above the 50 EMA, that's not over. As a discretionary trader, would I trade that? I would trade that, but I'm used to seeing what I know what to expect from it. Okay? So if price comes away from the 50 EMA, okay, wait for it to close above it, because granted, you're going to see price retrace back to it. And then if it retraces back to it, it's going to continue higher, and you have what we all call the pattern or the tattoo right there. Okay? It will break out from the 50, retrace, come and test it, install the idea of the market makers, taking a breather, and then continuing back to the upside. All right? Mike Dutch, man. Happy birthday to your son, man. God bless him. Bless you, man. Hope you're all good, bro. All right? I keep losing, staying in trades too long. All right, I'm not going to finish reading what you've said. Okay? If you're staying in the trades too long, you're not sticking to the 2-hour rule. The 2-hour rule is this. You get out of your trade if it hasn't realized a profit within 2 hours. Why 2 hours? Because if you've caught the momentum, your profit would be realized within, on average, you're probably going to see a profit within the first half an hour. All right? After that, you're good to go. If price does actually pull back and sees a negative and you're in the negative, okay, you're still in the 2-hour zone. Okay? If after the 2 hours it's not seeing a profit, you're probably wrong. Get out, preserve the capital, and wait for the right move, because the move will happen. I'm telling you, it will happen. All right? All right, listen. Yeah, happy birthday to him, man. How you doing, Philip, man? How you doing? Are profits unrealized? Really, profits? You have to pay yourself. Yeah. W's been flying on ADA. You ever look into rando coins? I used to look at them, man, but the reason why is because they all pretty much do the same thing. All right? So it's just a crazy thing for me. You know, I just want to make sure that you guys understand what's going on across the board with the main coins, because that's where the money's at. All right? Now, there's something that I do want to address with you guys, and I'm asking for a little bit of help here. All right? I don't want to kill the mood, but there's something that I need to address to you guys, and it's very close to home. Okay? Okay. Now, I think you guys may or may not be aware, I posted it today, but had a relative through marriage, but we've known the guy for so many years. You know, it's been in the family for so long. Okay. good friend of ours, Alex. Okay. I only found out literally this morning about Alex. Okay. Passed away. And wife, 4 kids. All right. Was 39. You know, he just went to sleep. That's it. You know, guy was fit as a fiddle. You know, this guy was a machine. You know, he used to joke with me about every extra kid he had. It was like 5 hours sleep that he would lose, to the point where he's like, he doesn't understand why he sleeps now. Sleeping is a waste of time. But this GoFundMe page has been created by his twin brother. Okay. And I'm asking you guys just to help out. I've donated, and there are other guys that have donated as well. But it's just to help the family, because now it's all on his brother now. Okay, he's got 4 kids. His brother's got 3. And his brother's just inherited another 4 children. So 7 kids. You know, he runs a family business. And I just want the community to come together just to help this family out, man. Because I mean, I don't know what to say, man. It's sad. It's so sad. It's so shit. It's hit the Greek community massively. You know, a massive loss, and it's so unexpected as well. That's the thing, you know. And it's sad to say that you know, you can anticipate if someone is terminally ill. You're embracing, you know, a new way of life for them. Well, a new adjustment to life. You know, you're getting ready for it, so to speak. But this was unannounced. There was nothing. You know, this guy was a machine. You know, he ran a family business with his brother. You know, and they're both partners. They ran the game. They were solid. You know, you couldn't tear them apart. Top boys, man. Top boys. And my heart goes out to him, to his brother, and to his wife, his family, and to everyone that knew him, man. This guy had an impact on a lot of people. You know, and if you go to the GoFundMe page, have a read on what's going on here. Alex Kyriakou. All right. His 4 kids. His brother just, you know. I just want the community to come together. All right. And just help. Every little helps, man. Everything helps. You know. Businesses are closed now because they're, you know, they've got to sort things out. And this is what I mean. It's such a shock. So anything would be welcome, guys. You don't have to throw in thousands, just anything. Okay. And I'll be very, you know, mad respect to all of it. I'll be so grateful if anyone can do that for me, for these guys, not for me, for these guys. All right. The Greek community is coming together solid. As it's a shitty thing, you know, to come together in such difficult times. You know, we should be there in the good times, but we have to welcome the bad with the good. And that's the story of life, guys. You know. So yeah, I don't think you can send crypto, bro. I don't think you can, man. But yeah, that's Alex for you guys. So, you know, I've pinned it to the chat. The GoFundMe thing is pinned to the chat. Okay. And thank you, man. Thank you, DR. Thank you. So just, life is very precious, guys. This guy went to sleep. You know, this guy went to sleep. That was it. And that's what's, you know, shocked. Sonny, thank you so much, man. You know, it's all good. We, you know, that, you know, look, I don't want to use this situation is about communities, man. Okay. We're in an industry where if we can extract from the marketplace, we are learning to fish. Okay. And we can effectively help other people, you know. This is the agreement that you make with yourself. When you pay yourself, you pay others, because you will always be in a position to pay yourself because you understand something. All right. And anyone that does donate, mad respect to you. thank you very much. It's all going to these guys, man. It's all going just to alleviate at least the financial pressure on his brother, his wife, and everyone else. So mad respect to all of you. Thank you very much. Okay, I am gonna end the stream. Okay, but thank you very much, everyone. All right, we've had a good little stream. We've established what's going on. All right, but life still goes on. That's the sad truth. Life still goes on. All right, but if we can make an impact, then let's go for it. All right, so mad love to all of you. Got nothing but love for all of you. Okay, we'll be back again tomorrow. Patreons, make sure you're aware, we've got videos coming. These little quick updates that I give you, I know they're much easier than sitting down reading the images, but the images do help. Okay, so I'll be doing the videos tomorrow. The projections channel, go and join the projections channel, guys. It's all there for you. They are the shorter version of the streams, 10-minute, 8-minute videos on what price is doing at the start of the day. So before the London New York crossover session, it's going to help you understand the concepts. Okay, that link is in the description of this video. Okay, but thank you very much, everyone. Got nothing but love for all of you. I hope you're all good. Take care. Good night.